Listen up, this whole idea that subscription lines are just a harmless tool is a trap, and if you're a limited partner, you need to cut through the noise right now. The first thing that's gonna hit you hard is how easily these lines can mask real risks that nobody wants to talk about openly. You might be thinking, it's just a short-term loan, how bad can it be? But here's the brutal truth. These lines create a blurry line between actual fund performance and what looks good on paper. It's like a fog that hides the real liquidity, the real timeline for your money. And if you're sitting there relying on glossy reports showing strong returns, you're fooling yourself because those numbers could be supported by borrowed cash, not real gains. That frustration you feel, that gnawing doubt in the back of your mind when you hear about subscription lines is exactly the feeling you need to trust. It's not paranoia, it's clarity trying to bite through the shiny veneer. What most funds won't tell you is how these subscription lines change the math behind your capital calls, your actual risk, and your exit timing. They stretch out your exposure without preparing you for the possible consequences. If the market slows or deals stumble, suddenly you're locked in a far more complex situation than simple investing. It's not just your capital at stake, it's capital that's been artificially propped up by debt that you didn't really sign up for. Here's what has to happen next. Stop trusting reports without digging into the source of that capital. Demand transparency, like your investment depends on it, because it does. Get ruthless about asking your GPs how they are using those subscription lines. Are they just smoothing cash flows, or are they using that debt to mask underperformance or delay tough decisions? Look for clear agreements on how those lines impact your returns, your timeline, and worst-case scenarios. And if the answers sound vague or rehearsed, pull back. Your job as an LP is not to be polite, it's to protect your capital, your future. You might be burning with anger because you realize this system is rigged to hide real risk from you, and you should be pissed off. They want you to see only perfect balance sheets and ignore the cracks underneath. But here's the brutal secret they don't want you to know. The power is in your hands. You are not just a passive passenger. You have the leverage to reshape how these agreements are written, how transparency is enforced, how risk is shared. Push for covenants that limit reckless use of subscription debt, insist on quarterly updates that detail how much debt props the fund's NAV, and hold GPs accountable if that line turns from a tool into a trap. You want stability? You want your money to work without surprises? Start demanding that subscription lines be treated exactly like what they are, debt. That means real scrutiny, real stress tests, and worst of all for some fund managers, real consequences if things spiral. It's uncomfortable, but that's exactly why you must do it. You are here to cut through illusions, to demand results, not excuses or glossy smokescreens. If you don't fight for this now, you're signing up for shocks down the road. Illiquidity, delayed distributions, and worse, a complete mismatch between what you thought you owned and what you really own. The money is yours, your future is yours, so do not let anyone sell you a story where subscription lines are a harmless hack. They are a double-edged sword, incredibly useful if managed properly, utterly dangerous if left unchecked. Force the dialogue. Be the hardest question in the room at every meeting. Don't just nod and move on because it's uncomfortable. Demand the real numbers, the real risks, the real plans for managing that risk. No more half-truths, no more hidden debt fangs. Subscription lines can be a weapon or a poison. The difference is who holds the control. Make sure it's you. Subscribe to our YouTube channel and open the featured link to discover more.